You may have heard a lot over the past couple of days about the meltdown of the Turkish lira. And this really started with a tweet from President Trump threatening to put a 50% tariff on steel and a 20% tariff on aluminum. That caused Turkey to respond with things like banning short selling on stocks because their stock market is crashing. Now, if you ban short sellers, a stock can crash to zero if there are no shorts out there. Short selling prevents a stock from crashing to zero. It puts a floor in it because as that stock falls, the short seller is making a profit, and sometime or another he wants to buy back the stock and lock in the profit. So he's going to be buying stocks, putting a floor under it. And they don't necessarily want to miss that bottom. So a lot of short sellers try to buy back early. So it helps to actually stabilize a stock market to allow short selling. But they also rolled out prison threats when it comes to capital flows. They're trying to keep capital from fleeing the country. Now, one thing that is much more concerning to me is that it's also potentially causing a contagion that's affecting especially the Brazilian real. That's the one to watch. But this started quite a few months ago, and I made a video on this, I think back in February, and I was saying that trade wars and tariffs are never a good idea, that it hurts both parties involved, that there are no winners. And in the comments, I noticed a lot of people saying things like, well, normally I agree with you, but I have to disagree with you here because, and they would make an argument of why we need these tariffs, but the arguments would never include the economics behind it. And basically, when you argue for tariffs, you're arguing against math. You're saying that math is wrong. But no matter how much you may want 2 plus 2 to equal 22, it will always equal 4. So this article is a couple of months old. And here they're saying that China hikes tariffs on U.S. soybeans, electric cars, and fish. So soybeans and electric cars, remember that. Now, China is putting in 25% tariffs, and that started back on July 6th of 545 products, including soybeans, electric cars, orange juice, whiskey, lobsters, and so on. So these are retaliatory tariffs for the tariffs that we imposed. So we imposed some tariffs on Chinese goods, making those goods more expensive here, slowing down the importation of those goods to try and hurt China. But there's a lot of businesses that do the importing and exporting, and they employ American people. These are American companies that are doing import-export that employ Americans here, and now their business model has just been completely disrupted, and a lot of them will be going out of business. Now, China imposed these retaliatory tariffs, and so they're going to impose tariffs on goods that we are trying to sell them, causing a lot of their import-export businesses to go under because of the sudden game changers. All the economics of these business models is now completely different. And the funny thing is that the free market sort of makes up for this a little bit in the currencies. I'll show you a little bit of that later. But as they levied the tariffs against some of our agricultural products and electric cars, we come up with a $12 billion short-term stimulus plan to help U.S. farmers that are hurt by China's illegal retaliatory tariffs. So we create some tariffs against their products to try to gain some sort of advantage. They then retaliate, which when we put in the tariffs, it makes their products more expensive here. So it hurts the consumer here. Then they put tariffs on our products, raising the cost of our products there, hurting their consumers there that are no longer able to buy those products if they want. And then we tax our own population. We're taxing our workers here in the United States to give farmers $12 billion to help make up for the loss in sales to China that their retaliatory tariffs are going to cause. And then it continues disrupting business models. Tesla has made an enormous investment in China. These are the supercharger networks these are the superchargers that are available in the United States. You can pretty much drive almost anywhere in the United States, with a little bit of area in North Dakota not covered. But you can drive almost anywhere in a Tesla Model S, and the supercharging is for free for most of the Model S owners and Model X. And then these are the superchargers. So these are sort of like gas stations for electric cars. You just pull in, you plug in, and these go way up into the Arctic Circle in Norway. And so Europe is completely covered with them. You can travel almost anywhere in Europe driving a Tesla, and you don't have to worry about charging. And then you get over to China, and there's a huge investment going on there. The red ones are already installed. The gray ones are planned. And Tesla was planning on selling them a lot of electric cars and opening a battery factory there. Well, now Teslas are going to be going up 25% in China. And this is the most American car made that we were going to export to China. And we've made all of this investment in infrastructure there to help support the most American car that there is, that contains the most American parts. So it's employing a lot of Americans, and their retaliatory tariffs have blocked the electric cars, raising the cost of them 25%. So the only option would be to do what Harley-Davidson has done. They would have to open a plant, a Tesla assembly plant in China to assemble the cars. Harley-Davidson, when the EU imposed tariffs against the motorcycles, decided that they had to move some of the production of the motorcycles over to Europe. And there's been, backlash against that. There's been meetings with the White House and so on. But what's interesting is if you look at the reaction of the currencies, this is a one-year chart of the US dollar to the Turkish lira. What's interesting here is that it was at about 3.5 a year ago, and then we're at about 7 today. And that means that you get twice as many lira for a dollar. And most of this, if I go to a 1-week chart, happened on Friday after the tweet that Donald Trump made, and then Monday. So most of this is an instantaneous reaction to what has just happened. But what you're seeing here is that from a year ago, you get twice as many lira, which means duties on the steel just went up 50%, but you can buy double the amount that you could with the lira now being so much cheaper. You're getting 7 of them for $1 instead of 3.5. So the markets sort of make up for some of these imbalances, but meanwhile, government policies around the world tend to, whenever any government changes the rules of the game, everybody gets hurt. Businesses that thought they knew what they were doing, that had a plan, that were profitable, are suddenly unprofitable and have to do layoffs or close. So retaliatory tariffs, trade wars, they don't work. It's bad economics. It doesn't matter whether it's a Republican presidency or a Democratic presidency. It's just bad. Also, when you have a strong trade partner, when there is a lot of trade going back and forth, war becomes almost impossible. Trade wars can very often develop into real wars, and that is what happened during the Great Depression. The reliance that one country has upon another in trade, as that dissolves and each country becomes more independent, the risk of economic disaster if a war breaks out goes down, and so war actually becomes much more likely. It's a bad policy all the way around. Thank you very much for listening. If you got anything from this, please like it, share it, and subscribe to the channel.